for any of you that I guess don't know me, I am one of the instructors. I mainly deal with the psychology and the mentalist side, but I do teach bank shifts, manipulations, trap volumes, in intricate detail in Forexia Live. I sketch out, I have over like 15 to 20 sketches of different variations of bank traps. But this here is a complimentary class, even if you don't join Forexia Live, or if this still will make your trading better, or you'll have a much more deeper understanding. Because I do believe in empowerment, when you are, when I kind of do a webinar, I really want to bring value. So let me just get started. So obviously we already know, okay, market structure, as simple as that, zoning. You could tell the structure, it's a higher low, higher low, higher low. And each higher low is like a zone, right? And then it comes and doesn't break that high, retouches that zone, okay? So these areas, right, these zones, let me move this over, are key areas of human expectation, all right? Meaning they don't really exist. We make it exist, and the banks know how to kind of stage certain patterns in these areas. All right. So like here, for example, I have a few examples here. My background and method for, I guess, technical analysis is market maker method. I did study directly under Mark Chapman. I don't know if you know of his YouTube channel. I did one-on-ones with him. He's a good guy. I studied Inner Circle Trader, the Wyckoff method, and I kind of just brought it all together into my understanding. So this knowledge is to help with more of your execution, but there are still a bit more details. But however, this would probably be still enlightening. So we see that on the weekly chart, we see a weekly zone, right? Now, I don't go to the weekly chart a lot. I'm an intraday trader, but I do keep an account for when it's in a key area, regardless of a time frame. So in this key area, there's some type of expectation of, either a drop or a breakout and retest. Either way, the people believe that, okay, there is going to be some type of rejection here. So you can see on the 4-hour chart that there was an M formation that happened that did not break this zone or this high. Now, maybe if you even look at your TDI, it would show this second leg is divergent. And right there, this is the 4-hour chart. This would induce many to sell right here. This is where the average trader would sell because, it's out of zone. It's a clean, nice pattern, and then what happens is it's by no coincidence it happens in this area. And then you could see that when they accumulate enough, they did show a wick, some profit there, and came back. And they actually came up and hit the stops, did a trap above the zone. And then this probably was a news inducement. And then they did an aggressive shift. So basically, when you see a pretty pattern in these psychological areas, you really got to kind of be in stealth mode, because obviously 90% of traders don't make it in this business. And what we're showing here is, you see how I have weekly chart shows clear zone that many traders have their eyes set on. And many people are willing to pull the trigger in these areas and risk their hard-earned money. These areas are infested with institutional manipulation. So just to go a little further, I don't know if you guys know of Steve's method, but the banks do move in 3 levels. You know, I'll say a lot. I see it just about every week, but it changes on different pairs. It could be 3 to 4 to 5 levels. It depends. But specifically, what's more important is the trap has to make sense, you know? Like here, this is the daily chart. This is a supply zone, okay? And you could see that they did come to this supply zone and show some type of bearish inducement. A lot of people believe that's a level, but what it actually is, a lot of traders that may have gotten here were just kind of taking profits, you know, in this area. So a lot of areas that where traders take profit, people would see falsely as a rejection, and at the same time, the market maker would exploit this area. You see? And let me see anyone know how we can turn off the video so we don't see other people. Well, I thought I put it to another screen. Didn't know you could still see them, you know? Are they in the way of the chart? Or let me do that. Maybe that'll work. Okay. So you could see they staged here. And this is how it looks on the 15-minute chart. You could see they came and staged at that daily zone, right? Hit it 3 times. But they weren't showing, you know, they're just inducing off the level, inducing off the level. And then they come up, all right? There was a bunch of liquidity up here, stop losses, pendings, because people had the expectation of that zone paying out. And then they came up, right? And then they start hitting the level as a support, as a support. Then they come up, show a huge M pattern, right? It's like a macro M, but they don't break that high. And then news time comes, probably, you know, they hide it behind news a lot, and then they shift aggressively. So you could actually even see here to this other trap area zone, they did a W and then they shift off the buyers. You know, this first leg was people taking profits. Then the banks would maybe stage a pattern and exploit that area. And then you see they drop. So what's key is to, when it's in these areas, to not just react, but to look for something clean that, okay, well, look like retail's taking that. You know, you kind of have to sit back because you know banks always have to fish for dumb money. It's something that just always has to happen. You know, this is not a conspiracy theory. This is a necessary evil in all financial markets, because in order for you to place a buy on Euro USD, you need other people to place a sell, and the only way to make money is for people to lose money. So it could be really difficult when you have billions of dollars and you don't have enough opposite orders to fill in that order. So when a hedge fund manager needs to place a buy, he needs enough sellers on the other side to place that massive transaction. And there's some transactions that can take up to 3 to 4 months. If you look on a daily chart, you would see some pairs consolidating, and that's not random. It's a massive order being accumulated, and sometimes even up to 6 months. That's how big these orders are. And just for more examples, you could see that this is a resistance zone. And sure enough, at this resistance zone on the 4-hour, you could see they staged the M formation. Ideally, this is where I would buy, to be honest, when I see something obvious like that, right? But then they came and they did the stop hunt. They did show a slight higher low, right? Touch it as a support, and then they did the aggressive shift. So it really would help just to evolve beyond dumb money, just have more of an intelligent observation. You know, and I would also count levels. I don't need to see the 3 levels if you are hip to the market maker method. But if you see a zone and you see it drop for 2 cycles, and this is level 3, it would make sense that they would trap below that zone, touch it as a resistance, and then go up. But it makes sense. You're not just counting it because it's level 3. So again, we see a zone here. Prayer was hit multiple times, and you could see that they did show inducement off of this level. Right here, they show it again, and then they actually came up and hit the stops, touch it as a support, where most people would probably buy. They wouldn't be too sure about that. And then, they shift the trend. I'm just going to stick to the naked charts. So, once you could see that, all right, the 15-minute chart, this is a pretty critical area here, right? They hit it twice. Then they come up and hit the stops, and then so it's just gonna be a pretty quick class, like I say. Again, you could see this 4-hour zone. They did break the level, and it was level 1, 2. You could see the level 3, and notice that it did a hammer, bullish wick. That is a confirmation candlestick for a lot of traders that this would be a continuation. When you see it doesn't work, that is a good sell signal. A good sell signal is when a buy signal did not work or there was a shift against a buy signal. That's when you get more tighter stop losses, and it really works out. And even in between, you could see they have a trap area, and they do an M here, and then they actually come up, hit the stops, and then this went down a bit more. So, just so you could kind of find these areas. Like, for example, here, this was a zone, and they did drop 3 levels, but this was the 3rd drop, and it makes sense, right? Because it was under a zone, it makes sense to trap people under there because they did hit it twice here. So when you have when you want a cleaner speculation, you definitely want to keep an account for these psychological areas, but be careful when you see a pretty pattern in these levels, because that's usually how they fishing and they throwing the hook out to bait, to bait the dumb money. And again, we could see that they did close under the zone, touch it as a resistance here, and then they shift off of sellers. Even this is how it looks on the 15-minute chart. You could see that they did another little critical area, and then they closed below it. Maybe there was another trend line there, but they didn't break that low, and they shifted from sellers. So mainly, you can see again, like this is a good example, right? A daily zone, or just a zone area right here that was broken. It comes for the retest. Now, look at this W. This W formed was the first W. Then they come back, hit the stops, and this right here is more of a higher probability because you could see that wick. This was a liquidity grab. And the reason it makes sense for that to be a liquidity grab, because it was in the zone of human expectation. So you can when you start to look for it and back test it, it can start to make a lot of sense, right? So no coincidence here where it came to this zone, this high here. They started to consolidate, and they were just booking orders, accumulating orders. breaking the high, bullish inducement, and then they dump. So it's just another way to kind of look at zones. You know, you still looking for them, something important to happen in these areas, but you definitely want to be more on stealth mode and not just jump into it, you know. Let me see if I have, like here, even on the weekly, it's on all time frames. See, they came and they did come to this zone and break it, have inducing you know, traders on the false breakout, and then they shift off it. So, you know, any more I have here? Let me make sure I have a good pretty good. Okay, this looks like a good example. Again, so notice this. You see on the daily chart, they come here, they reject this high, and they come and reject it here again, right? They don't close above it. Then they come and hit those stops and do a false breakout and then trap and then shift the zone. Now, the problem is now, if you look on the 4-hour, you would have thought that this zone was broken, right? You see candlesticks close above it. But when you look at the daily, you could see that they intentionally did not break that high, even showed a wick here again, then hit the stop. So it made sense of the area that they was working, you know? And says, how do you mark up your daily, weekly zones? Is it off the daily, weekly? It's just, yeah, it's just from the highlight. For example, here, right? I just would draw a box because it's more like an area. It's not just a line, you know? This was just what they would call a supply zone, right? And I would draw a box for that area. Yeah, for maybe the size of the wick. I don't like to make it too big, but just when you see an area that they move significantly from. And the reason this zone, you would say, worked was because when you look on the daily, this was just a wick. The candlestick closed under here. Then it closed under here. So this was the real high they was working. And even though it came to this zone, this 4-hour zone, this was actually the stop hunt trap that didn't break that high, you know? So, all right, I see Dylan in the room. So you could see, again, let me pick a good one here. How price does come and reject these areas. And you will see that as you back test, but it definitely helps to, for example, they come back to this zone, people buy off it here. That was the first pretty pattern. This is how it looks on the 4-hour, and they come right back for those stops and then shift fully. Like someone drawn on the, so you see that was a stop on. So it's good when you see a pretty pattern, then you get stop on it, and then it just has more of a high probability. Yes, yes. So I do draw zones on higher time frames just so I could see the psychological areas, you know. But I go to the 1-hour and I look for patterns of, okay, like for example, here it did reject, it did show some inducement, but you know, the higher level longs that got in were trapped and they just worked off this high. And you could even possibly, it would make sense to sell because you could reverse engineer that they would be going down for a possible liquidity grab, right? They're not breaking that high. So it really could, you know, it helped just with having a different type of observation. Yeah, I enter off a reversal candle, railroad track, pin star formation, MW shift candle. It's all different, you know. But when you know the variations and like that, and you know, you see like this wick right here. I think this trade. Wish I had it where it was here, but you know, it's difficult when you don't know how to wait for these manipulations, because trying to trade macro zones and not wait for the stop hunts and manipulations could be really difficult. That's why you see swing traders and traders, when they trade macro zones, they have a 50 to 60 pip stop loss, you know. But with kind of decoding a bit more of the chaos, it really could it could help to have a tighter stop loss, you know. So again, even a trend line, they did a W. So true market structure really is seen behind the veil, so to say. Like this W is before a news event, and they came and hit the stops, and then they went up. So what you want to do is, ideally, you know, this is the last slide here, and then I'm gonna kind of present the, you know, just the Forexia live, because we do cover even more detail than this. You could just think of the 6 instructors, including, this is just a complimentary free class. Like I said, I have many different patterns allowing you to be adaptive and like water in the market, you know. So you could see an obvious resistance level, obvious trend line. This is a point of confluence. A lot of traders would pull the trigger here, then the stop on happens, and then they shift, you know. So let me, Dylan, let me unmute you right quick. Yeah. So what I'm gonna pull up, you know, just, you could just tell them about Forexia Live a bit.
Yeah, sure. Well, thank you, Mark. Thank you for doing this webinar for everybody. Overall, loving the class, loving how you explain everything. Mark is like he said, he is one of the instructors, one of the 6 different instructors of Forexia Live. Forexia Live basically is 45 minutes of live sessions a day, each day of the week that the market is open, so Monday through Friday. And the registration period is basically open for the entire month, whether you join the first day of the month or the last day, because you get access to all the recordings of the month as well. So it's a great value. If you guys want, if you guys enjoy the material that is being offered, feel free to check it out, forexia.net/live.
Yeah, this is it right here. You know, and our goal is to help to decode where, you know, where it look chaotic, but to make it into a beautiful work of art, you know, where you're like 10 steps ahead, because it's really like, I mean, even with psychology, when you understand more and more of manipulation, you have your trading plan, you know, emotional intelligence, we do all of that, but understanding the deeper aspects and levels of manipulation does help with psychology as well, in discipline, you know, because you're more aware, you know, like he says, the way of the superior trader, you know. And as you see, sessions are recorded. There's over 20 hours of recordings that you have from all of us. So, you know, I really, like I say, even with what you took out of this class, I'm more interested in just your success and alleviating whatever suffering or whatever you're going through in your trading. Even if you were not able to join it, I really just care about bringing value, even with this being a complimentary class, you know? So
Also, Raphael asks if they get to see the videos from the entire, all the videos that are recorded from the past sessions, I believe. I'm not going to speak much about what's going on behind the scenes in Forexia at the moment. However, there are some massive, massive things coming, and it's going to be absolutely crazy what is coming, you guys. Like I said, I can't give too many details, but basically, you guys will have access to all the recordings, all of the basically all of the live recordings that have happened for Forexia Live, all of the months. So right now we have we started in December, January, February. We're going to be combining the mastermind. We're going to be combining so many different things. We have a scholarship program that we're going to be bringing to you guys to get all of the services for free of charge. So keep your eyes open with what's happening. Keep your eyes on the updates on Forexia, Telegram as well. We got a lot of things that are coming out very, very soon.
All right, great. All right, man. Well, I'll end it right here. I'll end the recording.